This video is all about how to calculate auto loan, so when it comes time to buy that dream car and dish out some money for it, you know exactly what you are doing. So let's say you're going to look to buy a Ford F-150, and what happens is you're not going to buy it through necessarily Ford. You need somebody to loan you the money. So let's say US Bank checks your credit score and they say, yes, we're good to loan you this money. And so you sign a contract that looks something like this. It says, by signing this contract, you agreed to purchase the $35,000 Ford F-150. You paid $5,000 on the down payment, which means the loan amount is $31,000. Your agreed upon yearly interest rate is 6.5%, and the loan term amount is 48 months. So you agree to this, you sign all the terms and conditions, sign your name, date it, and boom, now the car is yours, and you now have to work to start paying back US Bank. So to calculate how much you'll pay per month, there's 5 things you need to pay attention to. And so the first is the total price of the car. Then there's the down payment, the loan amount, the interest rate, and the loan term, which is like the amount of months that the loan is. And once you figure all that out, then you can figure out what your monthly payment is. So let's take a look at this contract right here, and we're going to use all this and figure out what the monthly payment for this would be. So let's first look for the total price. So it says, by signing this contract, you agree to purchase the $35,000 Ford F-150. So that means the total price of the car is $35,000. Then it says you paid $4,000 on the down payment. So that means you paid $4,000 on the down payment. And so to find out the loan amount, that's the money that US Bank is loaning you. So they're not loaning you the down payment. You already paid Ford $4,000, and now you need $31,000 left. And so again, it says, which means the loan amount is $31,000 because the total price of the car was $35,000 minus the $4,000 for the down payment. So US Bank is loaning you $31,000. Now we need to find the interest rate. It says your agreed upon yearly interest rate is 6.5%. So that's right there, 6.5% interest rate. And now the last thing we need to know is how long of a loan this is for. And so the loan term amount, it says, is 48 months. So that means 48 months is the loan term, which is 4 years if you want to do it by years. But that means you're going to have 48 monthly payments. And once you're done with that, the car is paid off. So to do this, we're actually going to use a compound interest calculator, and we're going to use NerdWallet's auto loan calculator, and we're going to plug in all these values that we just found. So we're in NerdWallet's auto loan calculator right here, and I think this is the best, easiest, most efficient way to figure all this out. And so what we're going to do is we're going to figure out what our monthly payment is going to be based off the information we just did in finding out what our loan would be on that Ford F-150. So we're just going to fill in all these fields here, and then our monthly payment will pop up here along with some other information about our loan. So price of the vehicle, remember we found, was $35,000. Our interest rate was 6.5%. Our loan term amount was 48 months or 4 years. And our start date, you can just use the date given. Our down payment was $4,000. And so with all that given information, make sure all of it is plugged in correctly. Our monthly payment is right here, $735.16. And our other information is here. So our loan amount, the US Bank loaned us $31,000 because we paid $4,000. So 35 minus 4,000 is 31. Our total interest cost, so the money US Bank is making off of us, they made $4,287 in interest off of us. And then the loan payment was going to be $31,000 plus that. So we paid $35,287 total for the loan. The amount that we paid total for the car would be this amount plus our down payment. So overall, we spent $39,287 on this car. And then by the date that it's paid off, so after this date, 5/27, we would not have to make any more car payments on this. It's just your car. You don't have to worry about any other monthly payments. So that's how auto loans work. And when it comes time for you to buy, a new car, you can use this as a good tool to give you a good idea of what your monthly payments might be based off certain interest rates. Hope this helps, and have a nice rest of your day.